Welcome to another deep dive. Today, we're going to be tackling the Vancouver housing market using WOWA.ca's November 2024 report. Buckle up, because this market has been anything but predictable lately.
Indeed, yeah. We're seeing some fascinating trends emerging, price fluctuations that, well, they raise eyebrows, let's just say that, and a whole web of factors influencing this dynamic market.
The report puts the average home price in Greater Vancouver for November 2024 at $1,276,716. It's a tiny dip year over year, just 0.5%, but then it jumps up 2.1%. Compared to October, it's like the market is playing tug of war with itself. What do you make of this push and pull?
Well, it suggests there are competing forces at play. On the one hand, we have the lingering effects of the Bank of Canada's interest rate hikes, which initially cooled the market. On the other hand, bolstered resilient demand, perhaps fueled by population growth, a strong local economy, and the psychological impact of those anticipated rate cuts.
So it's not just about the numbers, it's about the sentiment too. Okay, let's talk about the benchmark price. The report has it at $11,172,100, down 0.9% year over year. Now, I know the benchmark price is supposed to give us a clearer picture, but honestly, it's always felt a bit like economics jargon to me. Can you help me and our listener really grasp what it means and why it matters?
Absolutely. Think of it like this. If you were trying to compare apples and oranges, it would be tough to get a sense of which one is worth more. And average prices can be like that. The benchmark price helps us compare similar types of homes over time, like tracking the price of a gala apple year after year. It strips away some of the volatility and gives us a more reliable gauge of the market's true movement.
That's a great analogy. So even though the benchmark price is down slightly year over year, the report also highlights that it's up a whopping 68% over the past decade. That's a pretty dramatic climb. What's fueling that kind of long-term growth?
There are a few key factors. Population growth in Vancouver has been steady, and that creates more demand for housing. We've also seen significant foreign investment in the Vancouver market, particularly in the past decade, which has added to that demand pressure. And then there's the issue of supply.
Right, the classic supply and demand dance. So more people wanting to live in Vancouver, more money flowing in, but not enough homes to go around. That's going to push prices up.
Exactly. And that's where those municipal regulations and policies we talked about earlier come into play. They have a significant impact on how much and what kind of housing gets built. Vancouver's recent move to allow more multi-unit dwellings is an attempt to address that supply issue.
Let's zoom in on those different housing types and how they're performing. The report shows detached homes are averaging $2.16 million, up 1.7% year over year. Those detached beauties are holding their value, aren't they?
They are indeed. Detached homes are often seen as the most desirable property type, especially for families. They offer more space, privacy, and that classic Canadian dream appeal.
Meanwhile, attached homes are averaging $1.24 million, also up 1.8% year over year. But condos are telling a different story, averaging $785,000, down 1.1% year over year. So we're seeing some divergence here. What's driving those different trends?
Well, condos are generally more sensitive to interest rate fluctuations. They're often purchased by first-time buyers or investors who are more reliant on financing. So when interest rates rise, it can make condos less affordable and cool demand.
Makes sense. And it also ties into that affordability issue we were discussing earlier. If you're a first-time buyer in Vancouver, a detached home might be completely out of reach. So you're looking at condos or townhouses. But even those are becoming increasingly expensive.
That's a key challenge facing the Vancouver market. And it's something we'll explore further as we delve into the policy implications and long-term trends. It's a complex issue with no easy solutions. But it's important to remember that the Vancouver market is not an island. It's influenced by national and even global economic forces.
That brings us to a comparison that always comes up. Vancouver versus Toronto. Both are Canadian hotspots. But the report shows some interesting differences. Vancouver's benchmark price is up 31% in the past 5 years, while Toronto's is up 37%. But hold on, context is key here. Inflation has been a whopping 18% over those same 5 years. So are we really seeing runaway growth? Or is inflation just muddying the waters?
That's a great question, and it's one that economists are grappling with. Inflation definitely makes it harder to interpret these price increases. It's like trying to measure the speed of a boat when the tide is coming in. Is the boat really moving faster, or is it just being carried along by the rising water?
Okay, so maybe the boat analogy is stretching it a bit, but I get your point. Inflation is like that rising tide, making everything seem more expensive. But what's interesting is that even with inflation factored in, both Vancouver and Toronto have seen significant real estate price increases over the past 5 years.
That's right. And it points to the underlying strength of both markets. They're both attractive places to live
Right.
with strong economies and growing populations, but they're also facing similar challenges like affordability issues and limited housing supply. So it's not just a Vancouver problem, it's a broader Canadian and even global phenomenon.
Speaking of broader trends, the report dives into Vancouver's recent policy shift, allowing for more multi-unit dwellings. It's being touted as a potential solution to the supply crunch. What are the potential benefits, and are there any concerns about this new approach?
Well, on the plus side, increasing the density of housing can certainly boost supply. It allows more people to live in desirable areas without sprawling outwards, which is good for the environment and can help reduce commute times. More units can also mean more competition, which could potentially put downward pressure on prices, at least in theory.
That all sounds promising, but I imagine there are some drawbacks or concerns as well.
Okay. Of course. One concern is that simply adding more units won't necessarily address the affordability issue. If those new units are primarily luxury condos, they'll cater to a different segment of the market.
So it's not just about quantity, it's about building the right kind of housing for the people who need it most.
Exactly. And then there are concerns about the impact on existing neighborhoods. Increased density can mean more traffic congestion, strain on infrastructure, like schools and parks, and even a change in the character of a community. Some residents might welcome those changes, while others might feel like their neighborhoods are becoming too crowded or losing their unique charm.
It's a complex balancing act, trying to create more housing options without sacrificing the things that make a community desirable in the first place.
Precisely. And that's why it's so important to have these conversations and consider all the angles before making significant policy changes.
Now, let's shift gears and talk about those sales and inventory numbers. The report highlights that 2,181 homes sold in November, a 28% jump from last year. At the same time, active listings were up 21% to 13,245, which is even higher than the long-term average for this time of year. More homes on the market, but they're being snapped up faster. What's the takeaway here?
This brings us back to that sales to listings ratio we mentioned earlier. It's a key indicator of market balance. A high ratio means more buyers are fighting for fewer homes, giving sellers the upper hand. A low ratio flips the script, favoring buyers. In Vancouver's case, the report puts that ratio at 17.1% for sales to active listings and a whopping 59% for sales to new listings, suggesting we're in what's considered a balanced market.
So, no clear winner in this tug of war between buyers and sellers. But a balanced market doesn't necessarily mean a stable market, does it?
Not necessarily. It just means that neither side has a significant advantage. Prices might continue to rise, albeit at a slower pace, or they could even plateau for a while. It's all about those competing forces we talked about earlier: supply, demand, interest rates, economic conditions, and even consumer confidence.
Now, we can't talk about market forces without addressing the elephant in the room, the Bank of Canada, and its interest rate policies. The report reminds us that the BSC's rate hikes in 2022 and 2023 initially cooled the market, then the anticipation of rate cuts in 2023 led to a bit of a rebound, and then bam, the BSC's actually started cutting rates in June 2024. It's like they're trying to steer a giant ship through choppy waters. Do you think they're losing control of the wheel?
It's an interesting question. The traditional relationship between interest rates and housing activity seems to be evolving. Lower rates typically stimulate the market, but we're seeing other factors like limited supply counteracting that effect to some extent. It's possible that monetary policy, that is, those interest rate adjustments, is becoming less effective in influencing the market.
So, perhaps the focus is shifting back to those fundamental drivers of supply and demand.
That's a strong possibility. If supply remains constrained, even lower interest rates might not be enough to significantly cool the market. It's like trying to put out a fire with a garden hose when you really need a fire truck.
Okay, that's a vivid image. So we have this complex interplay of factors influencing the Vancouver housing market. We've got interest rates, supply constraints, population growth, and even global economic conditions all swirling around. It's enough to make your head spin.
It certainly is a dynamic and ever-evolving landscape. But that's what makes it so fascinating to analyze. It's like a giant puzzle with new pieces constantly being added.
And speaking of puzzles, there's one piece we haven't quite fit in yet. The report mentions that Vancouver home prices have soared 233% since 2005, a cumulative growth rate of 6.2%. That's a staggering figure.
It is indeed. And it highlights a crucial point: wages and general inflation haven't kept pace with that kind of growth. That's why affordability has become such a central issue.
So it's not just that housing is expensive, it's that it's become increasingly out of reach for many people, even those with decent incomes.
Exactly. And that's why those policy decisions we discussed earlier, like allowing for more multi-unit dwellings, are so crucial. There are attempts to grapple with this complex problem and create more housing options for a wider range of people.
All right. We've covered a lot of ground here. We've unpacked those contrasting trends, delved into the Vancouver versus Toronto comparison, explored the potential impact of policy changes, and even ventured into the murky waters of monetary policy. But before we wrap things up, let's distill some key takeaways for you. What stood out to you as particularly surprising or thought-provoking?
I think the most striking takeaway is the resilience of the Vancouver housing market. Even with those interest rate hikes and economic uncertainties, prices have continued to climb, although at a slower pace. It suggests that demand remains incredibly strong, likely fueled by population growth and a perception of Vancouver as a desirable, stable place to invest. The supply constraints we discussed earlier are clearly playing a major role as well.
Right. And that monthly jump in average home prices, 2.1% in a single month, really caught my eye, especially considering the long-term trends we've been discussing. It suggests the market is still capable of surprising us.
Absolutely. It underscores the dynamic nature
Yeah.
of the Vancouver market and how it can shift quickly, often defying easy predictions.
Yeah. Here's a question I'm sure many people listening are pondering. With interest rates trending down and Vancouver exploring ways to increase housing supply, what does the future hold for this market? Will prices stabilize, continue their upward climb, or could we even see a decrease?
That's the million-dollar question, isn't it? If I had a crystal ball, I'd be a very wealthy person. But what I can say is that the future of the Vancouver market hinges on the interplay of those forces we've been discussing.
So it's like a giant game of chess with multiple players making moves and countermoves.
Exactly. If supply increases significantly and demand cools, we might see prices stabilize or even dip. But if demand remains robust and supply lags, those upward price pressures could persist.
And then there's the wild card of the global economy. Who knows what surprises are lurking around the corner?
Precisely. External factors like global economic downturns or shifts in investment patterns could also have a ripple effect on the Vancouver market.
It seems like the only certainty is uncertainty.
It's a pretty safe bet in any housing market.
Yeah, especially one as dynamic as Vancouver's.
What can someone who's thinking about buying, selling, or investing in Vancouver real estate do with all this information? Is there any actionable advice we can offer? The key is to stay informed. Do your research and work with experienced professionals who understand the nuances of the Vancouver market. Don't make decisions based on emotions or speculation.
And remember that real estate is a long game. Don't try to time the market perfectly. Focus on finding a property that meets your needs and fits your budget.
That's great advice. And it's worth repeating that many of the themes we've discussed today are relevant to housing markets across Canada and even globally.
Right. From Toronto to Tokyo, many cities are grappling with similar challenges: affordability issues, supply constraints, and the impact of policy decisions on the housing landscape.
It's a global conversation, and it's one that deserves our attention.
And speaking of conversations, we'd love to hear from you, our listeners. What insights resonated with you? What questions are you left pondering? Share your thoughts on our website or social media channels.
We're always eager to engage with our audience and learn from your perspectives. After all, we're all navigating this complex world together, trying to make sense of the data and its implications for our lives.
And that's a wrap on our deep dive into the Vancouver housing market. We've covered a lot of ground, from those intriguing price fluctuations to the complex interplay of factors influencing the market's future.
We've analyzed those long-term trends, explored the potential impact of policy decisions, and even pondered the role of monetary policy in shaping the housing landscape.
Hopefully, you found this deep dive informative and insightful, maybe even a little bit entertaining. We encourage you to continue your own exploration of the Vancouver market and the broader world of real estate. Stay curious, stay engaged, and stay informed.
Because as we've seen today, even seemingly small shifts in the market can have significant ripple effects. Until next time.
Happy diving.